You're listening to Reputation Anti-Stress Podcast, created by Serhiy Bitenko. How to act before, during, and after reputational crisis.
Have you ever stopped to consider what truly underpins a company's market value? I mean, beyond the usual things we look at.
Yeah, like the quarterly earnings, sales figures, that sort of thing.
Exactly. We often focus on those hard numbers. But what if there's something else? Maybe something quieter, often underestimated.
Something not quite on the balance sheet, but still powerful.
Precisely. A force that acts like a financial engine in its own right. Welcome to the deep dive.
Today, we're really digging into that force, the financial power of corporate reputation.
We're going to see how it's shifted from this kind of soft, fuzzy idea to something you can actually measure, a hard asset.
And our guide for this is the UK Reputation Valuation Report 2025. It's from Echo Research.
Right. They're known leaders in communication, brand, reputation intelligence globally.
So our mission for you, our listener, is to unpack how reputation has become, genuinely measurable, even investable.
We want to show where that value is really being created.
And also where it's perhaps most at risk. Crucially, we'll look at what sets the leading companies apart in today's world.
Okay, so for a long time, reputation was kind of seen as just PR, right? Image management.
Definitely. Often pushed off to the comms department. Seen as fuzzy, hard to pin down financially.
But this report, it really challenges that, doesn't it? What's the main takeaway?
The core finding is pretty stark. A really significant chunk, nearly a third of shareholder value in top UK and US companies comes directly from reputation.
Nearly a third. Wow. And in the UK market specifically for 2025.
For the FTSE 350, we're talking about 730 billion?
730 billion pounds. That's just huge. But what does that mean practically for a CEO or investor? How does this soft thing drive hard returns?
Well, it's about perception, isn't it? The market's view of a company's future, its stability, its long-term prospects.
So a good reputation means investors trust you more.
Exactly. It can mean a lower cost of capital because there's less perceived risk. Lenders and investors feel safer.
And it can boost the stock price relative to earnings, too.
Precisely. The market's willing to pay a premium for shares in a company it has confidence in. Think of it like a hidden asset that boosts growth and resilience.
A competitive advantage, really.
Absolutely. And it's crucial to get this. This isn't just guesswork or someone's opinion.
Right. The methodology matters here.
Immensely. It combines hard financial data with really valuable insights from C-suite executives, the people actually making the strategic calls, and investment professionals.
The ones whose valuations depend on that confidence.
Yes. So it's about understanding how perception, not just raw performance, shapes market confidence and value.
And this strength, this reputation, it helps companies in rough seas, too.
Definitely. A strong reputation acts as a kind of buffer in volatile times. It helps businesses weather storms that might shake others.
Okay, so looking at the UK overall, the FTSE 350, what's the big picture there?
Well, the report shows a largely positive story. About 95% of those companies are actually gaining value from their reputation.
So most are doing well on this front.
Yes, value is being created. But there's the other side.
The flip side.
Around 5% of companies are actively losing billions because of reputational damage.
Billions. What causes that kind of damage?
Some examples?
Sure. It often comes down to concrete things. Maybe poor handling of a crisis, obvious failures in governance, or just not meeting those evolving expectations society has now.
Like environmental standards or how they treat employees.
Exactly. Think about a badly managed product recall that hits trust, sales, investor confidence directly, or maybe excessive executive pay or poor environmental practices sparking shareholder revolts. These things have real financial teeth.
And what really struck me was how this has changed over time, the last 15 years or so.
Oh, absolutely. The landscape has shifted dramatically, hasn't it? Major global events have played a huge role.
Like the financial crisis back in 2008.
Yes, and then Brexit, and of course the COVID-19 pandemic more recently.
And each one highlighted different facets of reputation. Precisely. The financial crisis really shone a light on, financial integrity and how companies managed risk.
Then Brexit.
That brought adaptability to the forefront. Could companies handle complex political and trade shifts?
And COVID.
That underscored things like leadership credibility, how companies looked after their people, their social responsibility. It really broadened the definition of a good company.
So these weren't just bumps in the road. They actually reshaped market expectations.
Fundamentally. And connecting this to the market segments, we see a difference between the big players and the next tier down.
You mean FTSE 100 versus FTSE 250?
Right. The FTSE 100 companies, often bigger, more global, they seem to be under more reputational strain.
Why is that?
It likely comes down to their global exposure. Things like international trade tensions, geopolitical risks, they hit these companies harder, impacting supply chains, diverse customer bases.
Whereas the FTSE 250?
They tend to be more UK-focused, and they've held up steadier, reputationally speaking.
They're less exposed to those global headwinds.
Seems likely. And maybe they have tighter relationships with their domestic stakeholders. But the key point here, the strategic warning perhaps,
Yes.
is that companies need to treat reputation proactively
Yeah.
as a core business strategy, an investment, not just something you fix after things go wrong.
Because of that proactive approach is what builds that long-term shareholder trust and value.
That's what the evidence suggests.
Okay, so that's the overall picture. But does it play out differently across various industries? Is it the same everywhere?
No, definitely not. It varies quite a bit, and there are some surprises.
Like what?
Well, for 2025, the energy sector is actually leading in reputation contribution, about 42%.
Energy. Really? Given some of the historical baggage.
It is surprising, isn't it? But their role has become so strategically vital lately. Think energy security, geopolitical shifts.
So they're seen more as part of the solution now.
Increasingly, yes. Especially with the focus and, crucially, the investment in renewables, hydrogen, carbon capture. They're actively transforming, and the market seems to be recognizing that shift.
That's a major turnaround in perception. What about other sectors? Any notable changes?
Healthcare saw a significant drop, actually, down to about 16% contribution.
Why might that be?
It could be a few things. Maybe a sort of post-pandemic recalibration of expectations, or perhaps challenges in meeting complex societal demands while managing public perception effectively. It's a complex.
And which specific companies are leading the pack in the UK right now, according to the report?
Well, looking at the FTSE 350, Shell is right at the top for reputation contribution,
Okay.
followed closely by BP and Rio Tinto.
So energy and extractives are still very dominant at the top this year.
They are. It reflects those strategic shifts we talked about, their crucial role in the economy right now. But it's not just about the established giants.
Ah, you mean the movers and shakers.
Exactly. Companies showing the biggest jumps in reputation value year on year. That's really interesting, too.
Who are we talking about there?
Names like ITV, Hammerson, Future, and Rolls-Royce saw really substantial gains.
What do those kinds of jumps tell us?
Usually, it signals something significant happened. Maybe a successful strategic repositioning, bouncing back well after a crisis, or really aligning with what the market wants now.
Like Rolls-Royce. Their engineering strength combined with new strategies.
Precisely. That seems to have resonated strongly.
That's a really important point, actually. It shows reputation isn't static.
Not at all.
While the big names stay strong, others can rapidly gain ground through agility and smart investment and transformation. It's dynamic.
Absolutely. It could be proactively built, rebuilt even.
So if we peel back another layer, what are the core drivers? What actually builds that reputation value?
The report breaks it down into 9 key dimensions. It gives a pretty detailed map.
And for 2025, what stands out at the top?
The top drivers are quite clear. Number 1, long-term value potential. Investors want to see a future.
Makes sense. What else?
Second is the quality of products and services. Still fundamental.
Always important.
And then, interestingly, tied for importance. Quality of management and financial soundness. These 4 are really the bedrock.
Long-term potential, quality product services, quality management, financial health. Got it.
And what's really fascinating is how the whole equation seems to be broadening.
Broadening. How so?
Well, today's market isn't just looking for promises or slick marketing. It demands real proof, demonstrable performance, and adaptability across many areas.
So you have to walk the talk, essentially.
Exactly. Which brings us neatly to a big topic, ESG, environmental, social, and governance.
Right. ESG has been, well, volatile, hasn't it, in terms of its impact on reputation?
Very much so. It's been quite a roller coaster over the last decade for companies trying to figure it out.
What does the latest report show?
Well, after being pretty steady for a while, ESG's contribution in the UK actually dipped sharply into negative territory in 2024.
Negative. Wow. Any idea why?
Likely a mix of things. Maybe increased skepticism, those greenwashing accusations hitting home, a general market reevaluation of what real ESG value looks like versus just ticking boxes.
But it didn't stay negative.
No. And this is key. There's been a very strong rebound in 2025.
What does that rebound signal?
It suggests the market is getting more discerning. It's rewarding ESG when it's backed by tangible, measurable action. Actions that genuinely reduce risk or clearly drive value.
So not just pledges, but proof, like lower emissions, reducing potential fines, or good social practices attracting talent.
Exactly. And we need to differentiate within ESG too.
Yeah.
The E, S, and G.
Right. Environment, social, governance.
The E, environmental, is becoming much more measurable, more regulated. It's critical for investors now, globally. The momentum there seems unstoppable.
And the S and G.
Still vital, absolutely. But perhaps seen as having a bit more flexibility in how they're implemented sometimes. Those stakeholders, employees, communities watch them very closely.
And the report mentions something about the politicization of ESG.
Yes, particularly in the U.S., where it's become quite a political football. Paradoxically, this might be giving an edge to places like Asia and parts of Europe, which are doubling down on climate action.
So ignoring ESG is becoming a bigger risk.
Definitely. Not just reputationally, but strategically.
Right.
You risk falling out of step with global markets and missing opportunities.
Which leads to thinking about those global markets. Do the drivers of reputation differ much internationally, say UK versus the US?
Oh, they do. There are distinct nuances, which is fascinating.
How so? What are the main differences?
Well, the UK market, based on this research, really leans on those financial fundamentals we mentioned, plus product service quality and global competitiveness. Solid delivery, strong international presence.
Okay, dependable performance.
Whereas the U.S. market puts more weight on strategic foresight vision, robust financial viability, and, interestingly, very people-centric leadership.
So more focus on future vision and the human element.
Seems that way, which means for a multinational company.
They can't just use the same script everywhere.
Exactly. It raises that crucial question. Why tailor your message? Well, because different things resonate.
Give me an example. How might the messaging differ?
In the UK, you might need more hard proof points on global performance, stability, trustworthiness. In the US, maybe emphasize the visionary leadership, employee engagement, the innovation pipeline, how you're ready for the future.
It's about understanding those specific audience priorities and framing value through their lens.
Precisely. Nuanced storytelling.
Okay, so pulling all this together, the big takeaway from this deep dive.
I think it's that reputation is absolutely not a nice to have anymore. It's not just PR fluff.
It's a core asset.
A dynamic, measurable, essential asset portfolio. Companies have to manage it proactively, invest in it, build it constantly.
It's not just defense, like managing a crisis.
No, it's about offense, too. Building trust, attracting investment, keeping your best people, and really gaining that competitive edge.
It's fundamental to long-term success.
Absolutely. And maybe a final thought for you, our listener.
Go on.
Think about your own personal reputation portfolio. In your work, your field.
My personal one.
Yeah. What are your foundational strengths, your core skills, your values, what people rely on you for?
Okay.
And then, maybe more importantly, where could you invest? In new skills, deeper connections, future growth, to boost your own value, your resilience, your impact.
Applying the same principles to ourselves, not just companies.
Exactly. It's a powerful way to think about growth and resilience, isn't
Yeah.
it? 2-second pause.
You've listened to the Reputation Anti-Stress podcast. My name is Serhiy Bidenko. I'm the Crisis and Reputational Advisor. I help top managers and business owners, members of supervisory boards, find and apply the best solutions to overcome reputational crisis.